Petersen International Underwriters presents No Such Thing as a Bad Risk, Special Risk Disability Insurance Plans. Typically, when someone hears the word special risk, they think of impaired health cases. However, there are actually 4 variations of impaired risks in the disability insurance markets. Impaired by health, sometimes called substandard. We believe that no one is substandard. They are standard for their particular condition or situation. Impaired by other factors, which we will illustrate shortly, impaired by occupational issues, and impaired by avocational issues. Impaired risk cases. Not all impaired by health risks are obvious. A case that came across our underwriter's desk not too long ago involved personal disability insurance on a physician. This 54-year-old doctor had an annual income of $600,000 or $50,000 per month. Third-party statistics and our own industry experts agree that the proper amount of disability insurance for this person is $32,500 a month, equaling 65% of income. At first glance, you might think the impairment is getting sufficient amounts of disability insurance, since the standard markets currently have a maximum of far below this number. However, that's not a problem, since excess disability insurance is easily obtainable to bring someone up to 65% of income regardless of income level. Overall, this looks like a great case, except this doctor had a spouse die and sought counseling for about 6 months. During that time, he was prescribed Prozac, which he took for a few months, but discontinued the medication and counseling about 9 months earlier. The primary disability markets often take a dim view of depression and usually require a person to be treatment-free for at least 5 years before they would consider offering any coverage. Not so with Petersen International Underwriters. This is a wonderful case that we can easily accommodate. Not all impaired risks are health-related. Take the case of this buy-sell disability plan. This wholesale company had been in business for over 15 years. There are 2 partners. The value of the company is $8 million. A great case, except they needed $4 million on each partner. The primary disability markets that do write buy-sell disability limit the maximum coverage from $1 to $3 million, and usually the $3 million must have a 24-month elimination period. This alone is problematic, since most buy-sell agreements trigger at 12 months. In any event, this company still has a need for excess coverage, which is easily available to procure the $4 million on each partner. And if that wasn't enough, one of the partners is 65. Buy-sell from the traditional disability marketplaces do not write coverage at age 65. In fact, even if this partner was under 65 now, typically benefits will reduce between ages 60 and 65, with a theory that at age 65, or perhaps 67, the partner is to retire. Really? Even Social Security is pushing retirement ages up to 70. Our special risk disability plans are able to provide the excess coverage for the full amount on both partner, and the age issue is really a non-issue for our special risk disability plans. Take the case of ABC Law Firm. 10 attorneys, 30 staff members. When you divide the monthly expenses 10 ways, it equals $80,000 on each lawyer. A great case, except $80,000 a month on each partner. The primary disability markets offer a maximum of $50,000 per month. This leaves a shortfall of $30,000 on each lawyer. Our excess disability programs can easily wrap around any base coverage to provide the proper benefit amounts. Remember, business overhead coverage covers fixed expenses that you cannot escape: payroll, insurance, rent or mortgage, utilities, staff salary, etc. Large number of partners in the same profession. You see, the primary disability markets are not keen on companies with more than 5 people in the same profession. The belief is that if one person becomes disabled, the others can pick up the slack. What these carriers don't understand is that the others are already up to their eyeballs in work and cannot add more business to their plate. Oh, and did I mention that 2 of these partners are in their 60s? Again, age becomes problematic since the traditional disability carriers shy away from older ages, regardless if it's for personal or business disability needs. All 3 of these impaired issues are easily accommodated if you know the right source. A team of construction specialists are hired to work on a special contract to build a school. Sounds like a great case, except the school is in Iraq. You see, the standard disability carriers, as well as standard life and medical carriers, have a clause in their policies that says, except due to war or acts of war, whether declared or undeclared. Civilian contractors are commonly hired to build and rebuild cities and countries that have been or are currently besieged by battle conflicts. Yet the act of doing their job, which normally is not a problem, is an impairment due to a location. Meet young Dr. Smith and old Dr. Jones. Dr. Jones has his eye on retirement in the not-too-distant future. Young Dr. Smith sees an opportunity for both of them. A deal is struck whereby young Dr. Smith will buy into the practice of old Dr. Jones. The payments will be made over the next 5 years with the idea that 5 years from now, young Dr. Smith will own the practice outright and old Dr. Jones will have the cash in hand and retire. During the 5 years, old Dr. Jones will introduce the young doctor to the patients, teach the young doctor about the practice, and finish this great career 5 years later. What if, halfway through this buy-in process, young Dr. Smith becomes permanently disabled? Young Dr. Smith will have invested a lot of money but not have any ownership, and old Dr. Jones will have some money but still own the practice. This was not the plan. Our disability buy-in program allows for this transaction to be completed. Old Dr. Jones will receive the funds and transfer the ownership. At the same time, young Dr. Smith will now have full ownership of the practice and has a tangible asset. Take the case of John, a college senior. Here's John studying away. You may be thinking, why are we discussing disability insurance on a college kid? Well, John, you see, has a very unique talent. He can throw a 100-mile-an-hour fastball and hit a dime every time. John is being solicited by numerous professional baseball teams that once he signs a contract, his income will skyrocket to millions. He wants to finish his senior year, and a lot can happen between today and when he signs a contract. The traditional disability markets won't offer coverage to John because he's just a student. However, the loss of future earnings is an insurable event with our special risk programs. Impaired by Occupation. Every day we get a call from an insurance professional that says, I have a client who, and you fill in the blank. If you flip through the underwriting guide of the standard disability carriers, you will find hundreds and hundreds of occupations that are not eligible for coverage. Entertainers and athletes are the classic examples, but do you know any martial arts studios in your area? As common and numerous as these studios are, martial arts instructors have a difficult time obtaining disability insurance. We have for years been trying to convince our friends in the traditional carriers to reprint their underwriting guides so that wherever it says no, 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 it should actually say, call Petersen International, call Petersen International, call Petersen International. For some reason, they just don't want to do that. Yet, impaired because of a favorite avocation. I'm an executive that loves to race fast cars every weekend. Many times potential clients are stopped short of getting disability insurance for traditional carriers because of a favorite avocation. The classic weekend warrior, or perhaps participating in some good community service such as search and rescue or the reserves. Many carriers will either not write individuals who participate in hazardous activities, or if they do offer coverage, they'll exclude the activity. The good news is that through our special risk markets, we can offer coverage for either answer. If your client is declined outright, we can pick up the full coverage, or if they are offered coverage but excluding the activity, we could carve out a supplemental program to cover the person just while participating in that activity. There are numerous other impaired issues. Suppose your client needs disability insurance for just a short-term assignment or during the negotiations of a deal. Multinational and international clients are often difficult to place in the traditional markets. People with high net worth or high unearned income are often shunned by the traditional markets. These types of cases and many more can be written through Petersen International Underwriters. Just remember, there's no such thing as a bad risk. This has been one in a series of programs from our Meeting on Demand team. If you would like additional information on these programs or to arrange a live meeting on demand, contact our office today. Thank you.